After Jerome Powell came out today and announced a 0% interest rate hike, contrary to what everyone was expecting, we got a massive drop in the crypto market. I mean, look at all this red. Today, we're going to be going over the FOMC announcements, what they mean, and why the crypto market is tanking as it is, and from there, what we could be expecting next. This is going to be a wild one, so stay tuned, and let's dive into the news. U.S. stocks in mixed after Fed signals more rate hikes to come. Quick summaries here. The Federal Reserve held rates steady, signaling more hikes by the end of the year. The last bit of information here is the index is closed with the S&P 500 at 0.08% up, the NASDAQ 0.39% up, and the Dow Jones negative 6.8% down. U.S. stocks ended mixed on Wednesday after the Federal Reserve kept U.S. interest rates unchanged, but signaled a new economic projection that borrowing costs will likely rise by another 0.5 percentage point by the end of this year. The new projections added a hawkish tilt to the Fed's interest rate decision, showing policymakers at the median see the benchmark overnight interest rate rising from the current 5 to 5.25% range to a 5.5 to 5.75 range by the end of the year. This paragraph right here is actually extremely important. You're going to want to pay attention to this one because this is what I think caused the drop. Some people were expecting that the Fed would actually pause this month, which they did as a quick note, but also not raise rates anymore, said Sam Stovall, Chief Investment Strategist at CFRA Research. However, it does seem as if the FOMC members have become even more hawkish since last meeting, and I think that is what has taken investors by surprise. Earlier on Wednesday, a bigger than expected drop in the U.S. producer prices in May due to decline in the cost of energy goods and food signaled that inflation was cooling. Data a day later showed consumer prices moderated last month. Traders now see a 63% chance that the central bank will raise interest rates in July, up from 60% earlier on Wednesday, according to the CME Fed Watch tool. With that in mind, we saw the stock market right here, the S&P 500 raised by now 0.12%, crazy high, and the dollar index right here dropped negative 0.29%. Both of these readings will usually see a correlation with a rise in the cryptocurrency market, so it's really interesting to me that there is an insane drop as high as 7% in ApeCoin. Some others is like 5% here, 4% right here, 7% in XRP. Crazy drops pretty much market wide here on the cryptocurrency market. With that in mind, let's try and figure out why this might have happened. Here on the TradeConfident.io website here, I'm going to take you up to metrics and then macro metrics. We visit these every once in a while, but today I actually updated them for you. This is actually current data as of the beginning of recording this video. Bitcoin dominance remains at 49%, but Ethereum has dropped quite a bit right here with only 20% dominance. At the same time, we saw an extremely sharp drop in market cap. This has happened multiple times over the past couple of weeks here. Really steep steps here, and we are now below the $1 trillion mark. Currently, the market is standing at $990.99 billion. Next up, let's take a look at the stablecoin inflow and outflow. We saw a massive inflow of USDT into the market with only a slight increase of USDC. This tells me at the moment that there is a lot of people selling out. I think that's pretty obvious, but more people are trusting USDT versus USDC. Last but not least, we got the SPY, the TC top and bottom finder here. We've got a couple of sell signals up here. Typically, this will result in moves down, but that's not really what we're looking for. What we're looking at right now is the crazy increase that the stock market has had, which cryptocurrency did not experience. If you've been keeping up with my videos, you'll know that cryptocurrency has actually been on a fairly steady decline over the past few weeks. So technical analysis is showing super bullish. Right now, price versus while money flow is low. We actually got an increase here. Trend exhaustion is still relatively in the middle of its chart, showing that Bitcoin actually does have more room to drop. This scares me a little bit, but it also has equal opportunity to see a move up. Anyone that saw my Ethereum video today, you'll know that this prediction has already not played out. We got a significant drop, a break to the downside after cryptocurrency traders absolutely just ran away from this market. Here, price versus while money flow is low, trend exhaustion is low. Most often this will result in moves up, and currently we are relying on this structure support from the falling wedge pattern to keep us afloat. There's also a little bit of structure support here that we need to take a look at right about here at $1,624. Hopefully this combination, these two structure supports will keep us afloat there. With ADA Cardano, we also got a pretty significant drop past what was expected for our structure supports, and the story continues going on. Just about every coin dropped way farther than we expected based on what we were seeing on the price versus well money flow and trend exhaustion. This, of course, is due to fundamentals. The SEC just last Friday here, announced that several coins like ADA, Matic, and Solana were securities. This caused the initial drop right here, and the FOMC meeting today resulted in a drop. The weird thing is we got a 0% interest rate hike. While this is the first of its kind, anytime that we get a lower than expected interest rate hike, a lot of people are actually expecting a 0.25% interest rate hike. Most often this will result in moves up. I think what has everyone truly scared here is that Jerome Powell came out and said while there was a pause this time around, throughout this next year through 2023, we should be seeing, or at least could be seeing, a 0.5% interest rate hike, which is astronomical compared to the last few meetings. We've recently been getting 0.25% interest rate hikes. That's actually what was expected this time around, but we got 0%. Most often this will result in moves up, but of course that is not what happened. So all I can say is this: be on the lookout for structure supports. Structure supports are going to be our friends if we drop further from where we are right now. A move to 23,917, much lower than we've been in quite a while. In fact, right now is much lower than we've been since the mid-March right here. A move down there is very possible. Ideally, I think we're going to see moves up, but I personally hesitate to be bullish at this point because there's just a lot of bearish pressure coming out from the US government. So I think drops are very, very possible here. The main indicator I'm looking at right now is the price versus well money flow. Where well money goes, the price is likely to go too. So if you're following this, you're likely going to have some pretty solid success, even if there are a little bit of hiccups. Like right here, we saw a move up in whale money and a drop in price. More than likely, this is retailers getting really scared and running out of the market. But in general, we should be seeing, especially as price versus whale money flow bottoms out, as trend exhaustion bottoms out, if we see a buy signal anywhere in this area, all three of these should combine to see the next move up in Bitcoin. Where Bitcoin goes, the rest of the market should go. At least it's not always that way, but should go. So with that, we're going to be keeping everyone updated. If you want to track the market along with us, you can get all three of these indicators. In fact, all 11 of Trade Confidence indicators that we offer for $400 off right now. All you got to do is grab the indicators at the links in the description down below. Just go ahead and scroll down, click show more. The indicators will be the second link right here. Go ahead and click that. It'll bring you to our store page. Just go ahead and click I want this right here. Fill in your information, click pay, and it'll offer you the TC top and bottom finder for just $349 instead of the regular $749. Go ahead and click add to cart. You get your full $400 off, as well as all 11 of Trade Confidence indicators. Make sure your information is correct, click pay, and you are good to go. From there, as the market reacts, if we do drop here, I'm just looking for price versus well money flow to be low, trend exhaustion to be low, and a possible buy signal. All three of these will combine for the next move up in cryptocurrency. That's what I'm looking for. All I can say is I'm paying attention to what whale money is doing, and I'm paying attention to the news. Typically, we don't say to trade on the news, but it looks like the news has a ton of influence on what cryptocurrency is doing right now. It could be a good idea to just hold out until things stabilize. To each their own. Of course, none of this is financial advice. With that, thanks so much for watching. Trade safe, trade confident, and I will see you in the next video.